Welcome to the Asia Climate Finance Podcast, where our host and expert guests delve into and scrutinize the pressing issues and emerging trends in climate business and climate finance. We greatly appreciate your support. Please like, review, and subscribe to the podcast to help us grow and reach a wider audience. Be sure to take note of the disclaimers at the conclusion of each show. And now, here is your host, investor, analyst, and author, Joseph Giacobelli.
Hello, and a very warm welcome to the Asia Climate Finance Podcast. This episode, episode 56, is about climate business, climate finance, and the energy transition in the Asia-Pacific region from the perspective of a major investor. Our guest is Gavin Adda, the Chief Executive Officer of Peak Energy Development, based in Singapore. Peak Energy's investor is Stonepeak Infrastructure Partners, the $70 billion global infrastructure investor. Peak Energy is dedicated to the development, ownership, and operation of clean energy assets in a few countries around our region. The conversation with Gavin starts by talking about why the deregulation of power markets is so important to the energy transition and some other specific issues around this particular topic. We also look at which markets Gavin is most bullish on, and we chat about some interesting trends as well as briefly mentioning a couple of case studies. Finally, Gavin shares his thoughts on the long-term outlook of energy transition projects and solutions, related investments around the Asia-Pacific region. So I started the conversation with Gavin about his personal background beyond his professional biography. Hope you enjoyed this episode, and we would really be grateful if you could please provide us with your feedback and your questions.
That's very kind. Thank you. Yeah, so I started working in the tech sector in the 90s, 2000s, and did that for about 10 years, both kind of startups and small companies that were just getting going during the dot-com boom, and then also larger companies. At the period, I was kind of doing a lot of ERP, so large software systems and big databases. And it was people like Oracle that were moving from selling to governments and to military and Ministry of Defense and people like that over towards corporates. And so as part of this kind of B2B revolution that you were seeing in the sector, I think it's interesting because we're now seeing that revolution happening in the energy sector as well. And so I feel like you're kind of going back in time to what happened in tech and now what is happening in green tech. Then did an MBA in Singapore and France and jumped over to Korea, worked in Samsung in Korea for 7 years. Various different things there, including the second non-Korean ever in the chairman's office of Samsung. Samsung was about 20% of the GDP of Korea. And I launched the renewable business for Samsung in the US, and we built about $1 billion of utility scale projects. And what we saw there was a very rapid decrease in returns. So year one, we got like a 20-25% return on a long-term contract with Pacific Gas and Electric, the utility. Year two, returns dropped from about 25 to 15, and then year 3 to 7. And then in year 4, we were looking at more like sort of 5%. And so that forced us to start looking outside of the, let's do a big solar farm and sell that through the grid to a utility. We started to look at distributed generation. And so distributed generation is putting a solar system on a rooftop and selling that electricity to that building. So I think of Tesla, at the time it was called Solar City, a company called SunPower or Maxion. And so we're looking at that kind of, distributed generation business, very corporate focused. And that was much higher returns, much more interesting, and it's been much more of a stable business if you look across the world. And mature markets, how that market has evolved over time, it stays stable. So if you look at the last 10, 15 years in the US, distributed generation has continued to deploy billions of dollars every year, whereas utility scale has taken off and then collapsed and taken off and collapsed. Then I left Korea. I come to Singapore. I worked for REC Solar, which was the largest non-Chinese solar panel manufacturer in the world at the time. Ran a few departments for them, and my main job was selling the company, finding a buyer for that company, and I ended up selling them to ChemChina in 2015. That was the largest M&A deal in the renewable space. But what I really saw from that is, quite frankly, the manufacturing space is low margin, it's high volume, and probably not the right space for me. I raised, at that point, as I left REC Solar, I raised some money from a couple of individuals and started a distributed generation rooftop business in India, one of the first in the country. And we built a range of different projects providing sort of corporate B2B renewable energy. That is now owned by Shell and Keppel. Then I started another company backed by Everstream. Everstream is the founding investors behind Terraform and Sud Edison. That was the first renewable yield co, one of the first in the world. That was doing distributed generation in Africa, Middle East, and Asia. So got to see across all those different continents. And then ended up selling that to Total. Total Energies, the French oil and gas company. It was really between them and Macquarie. And then built a business, a distributed generation rooftop business across 13 countries. We built 350 projects. We were, one of the largest, if not by far the largest business doing that. And we built the first B2B corporate PPA project in Cambodia, the first in Vietnam, the first in Indonesia. So very exciting, cutting edge stuff. And then sold 50% of those assets to a company called Enios, which is the biggest oil and gas company in Japan. And after that, I moved over to run Total's utility scale business across all of Asia, which is the biggest renewable portfolio in Asia, $15 billion portfolio. And then about 2 years ago, I thought, okay, I see certain trends happening, certain exciting things happening in the industry. I'm not sure I want to be doing this in Total. What is the right platform? And I spent some time looking for the right investor to back the next evolution of the renewable sector. And ran quite a formal process, talked to all the big guys, and ended up picking Stonepeak. Not many people know who Stonepeak is, but they are one of the largest infrastructure investors globally, along the likes of sort of GIP, Global Infrastructure Partners type business. They have 70 billion under management, and they're 100% focused on infrastructure. For example, they have the largest offshore wind portfolio outside of China in Asia, and they just made an investment into one of the largest offshore wind farms in the US. And I raised $450 million from them and launched a company called Peak Energy, which is mandated to target sort of B2B customers across Asia, whether that is on-site distributed generation or solar farms, and really grow as we see that market grow. Try to really be the best possible energy partner for corporates in Asia.
That was a very, very rapid world tour, and if we had 3 or 4 hours, I would have about 300,000 questions. But we've got a couple of clarifications, if I may. Gavin, could you just explain? Some listeners will know what a yieldco is. Some listeners will not know what a yieldco is. So could you just explain that very quickly?
Yeah, of course. So if I step back, in renewable energy, you have a development business. You then have an investment, and all of your investment is up front. And then you have relatively low costs over the next sort of 20 or 30-year period. And the really exciting thing about this kind of infrastructure class is that that means that your revenue and your profits are quite stable because you don't have a fuel that you're investing in or buying, and there's no commodity that you need to worry about. The solar system is just going to sit there and operate, as long as you look after it, more or less, pretty sort of autonomously. And so that means that you've got a group of people that are running around finding the projects, developing the projects, getting the permits, constructing the projects and getting it up and running. And then after that, the system is just going to run. And that is a perfect, very interesting profile for long-term investors that want a good sort of long-term yield. And yield cos are usually listed entities where you put these assets in once they've been de-risked. So after you've constructed the project, you've checked the project's operating cleanly, you dump it in the yield co because the kind of capital, the cost of capital, and the risk return profile of those assets fits your classic sovereign wealth fund or pension fund or insurance, something like that, where they need to know 10 years from now, 20 years from now, maybe 25 or 30 years from now, I know exactly how much revenue I'm going to get off this investment. And then I can match that to my liabilities, which might be people who are reaching the retirement age or something like that. So you find that in this industry, a lot of people will go up into a split DevCo and AssetCo structure so that you can have a DevCo moving very quickly, potentially taking more risk, and an AssetCo that is then well positioned for that risk return profile.
So basically, it works a little bit like a bond, except it's a listed company. Okay, it can be a listed company, although not
exactly.
all yieldcos are necessarily a listed company. The second clarification, if I may, you talked a lot about distributed generation, and it seems that you started doing distributed generation, distributed energy a lot earlier than distributed generation now is kind of hot topic, but maybe 5-10 years ago it was not so hot. The biggest issue with distributed generation is the PPA, the power purchasing agreement, number one, and some countries forcing you to have backup power, what I would call backup power. So you got to have an agreement with the grid, although you're not really connected to the grid. Could you just very, very, very briefly talk a little bit about that?
Yes. So when I first came to Asia, it was quite difficult to put renewable energy into the grid. If you think about Vietnam or Indonesia or many of these different markets, the utilities were essentially looking to prevent renewable energy from coming in. And the only way that you could go and do systems was by putting solar on a rooftop. It's behind the meter. You're not allowed to send any excess power to the grid. So you're completely sort of isolated. And that is really the forerunner in this region. We've been able to go and do projects in Indonesia on a leasing basis or on some sort of legal contract structure that enables these things to happen. Now, if you then talked about some of the utilities and some of the regulators saying, oh, but if you do that, that means that I'm not able to sell something else. And so I want to try and get a remuneration for something that I didn't provide. And this is a classic reaction. And if I roll back sort of 20 years ago when I was doing this in the US, you saw the same thing happen. And that's why I think we have a bit of a competitive edge, because I had the experience of doing these rooftop projects and distributed generation in the US, and you saw what happened. So you had multiple different states in the US taking different approaches. You had California that was very aggressively encouraging distributed generation. And then Arizona was the really good example that was really trying to prevent it and did exactly what you said, where they basically said, okay, if you sell $1 of energy to the building, I want $1 because I would have got paid that otherwise, but I didn't actually have a chance to sell that power. So I would argue that in many cases, this is a classic case of a monopoly trying to prevent other people from getting into that market. But it isn't actually a case of a service being provided. It's not like they did something. It's just that they're upset that someone else is intruding on their monopoly.
And that's a great segue to talk a little bit about how important the deregulation of power markets is so important to the energy transition. So I believe you have a couple of thoughts on that.
Yeah, I mean, so the reason, that I wanted to start Peak Energy, and the whole impetus for starting Peak Energy, is that you can now see deregulation kind of moving through Asia. And if we step back, what you've got the largest energy sector in the world, energy. Sorry, the largest industrial sector in the world globally is energy. It's going through a radical disruption. It's expected, the energy transition is expected to be more than $6 trillion of investment by 2030. So it's just a massive business. 50% of that growth is forecast to come from Asia. And within Asia, 50% of that is coming from China. So, 25% of the growth is coming from places like Vietnam and Malaysia and Thailand and Japan. And places like Vietnam and Malaysia are expected to grow 10x in the next 5 years. What's driving that? What's driving that is grid parity, right? So solar costs dropping 15 to 20% per year, battery costs dropping between 30 and 50% per year. So the LCOE, so the levelized cost of electricity, the per kilowatt hour price of a solar system has dropped below the cost of the grid. So if I'm selling solar power in Thailand, I'm 50% cheaper than the cost of the grid. And meanwhile, the grid is increasing somewhere between 5 and 10% per year, if you take a long-term view, across every market. And so in Asia, this is really a cost-driven, I call it a real market. It's a grid parity market. It's not like the US, which is subsidized. It's not like a lot of Europe that was historically subsidized. Asia moves because of cost. That's one big driver. And the second big driver is the corporates looking for renewable energy to meet their sustainability goals. So RE100 targets for 25 and 2030. And so then the next sort of component of this change is that you've got a lot of the supply chain has been moving out of China over the last decade or two. That's really driven by labor cost, right? So you've seen Intel, Samsung, Nike, all these different guys that were originally based in China now moving over to Vietnam, Indonesia, Malaysia. And when they're doing that, they're looking for good labor, strong sort of resourcing capabilities, cheaper power, good regulations, and green energy. And that good regulations piece is a really challenging topic. And I've spoken to both the regulators and the senior guys, senior corporates, where they're saying, if you don't give me access to renewable energy, I'm going to go to another country. I can go to Malaysia or Indonesia. If I come in, I'm going to be 5 to 10% of your GDP. So I'm important. Samsung is 20% of Vietnam's energy consumption. That's just a huge player in the business. And so they're able to drive change. They're coming in and saying, I want green energy, and I can't get it from from the existing monopoly. The monopoly has been controlling energy prices and has a lot of investments into, let's say, coal usually, but sometimes gas. And so it's not easy for them to pivot. And they're really getting paid through taxpayers' money as well as from payments from the energy. And so they've struggled a bit to move over. If you then move over from fossil to renewable, and then if you then combine what's happened in the last 5 to 10 years with spikes in commodity prices, you've seen oil and gas guys make record profits, right? The most profitable company in history, Aramco, the most profitable company in European history, Total Energies, and you just see that right across the board because of COVID and because of then Ukraine. So these different things have meant that power prices are extremely expensive. Utilities are unwilling to change. And so the only option is for governments to deregulate and have infrastructure funds like myself come in and renovate the generation sector. That's the easiest bit of a power system to upgrade. Renewables is the cheapest form of power, right? So, I mean, if it's structured well and the regulations fit, you can easily install renewable systems in a matter of months at a much lower price than new build gas. And so I think what you're seeing governments say, okay, I'm going to deregulate. I'm going to give FDI, foreign direct investments, a chance to come into my market. give me renewable energy, and then I'm going to be able to get hold of those large corporates, and those large corporates are then going to bring more employees, more employees, more employment, and that's going to give me more votes. So there's that kind of process that's happening. So what has happened in the last few years is Japan, Australia, Philippines, Singapore, and Korea have all moved very recently into deregulating their markets. And even places like Thailand, Vietnam, and Malaysia that are historically much more closed, much more monopolistic, even they have all announced plans to deregulate. And so we're really focused on being ready for those markets because we are experts in energy and we have the B2B capabilities that I was talking about before. We signed 350 corporate PPAs in the last 5 years, so which is maybe 10 times bigger than most other players. That means that we're able to help corporates work their way through some of the complexity on regulations and how to structure those contracts effectively.
Fantastic answer as always, Gavin. And I think no, it's great. It's great. And I think there's a couple of takeaways which are really, really, really important. Is that Asia, when we're talking about the energy transition, there is the climate agenda, the NDCs, and so on and so forth. But the prime motivation is, number one, a cost consideration, because solar and wind can be below the price of fossil fuels in some markets. And secondly is the need for funding, because people forget that 85% of consumption in Asia is from developing Asia, and so they need the gigawatts to just grow their economies. And one final point is the title of my book, published in 2021, Gavin, was Asia's Energy Revolution, and was talking about two things. One was the market transformation, meaning the deregulation of the power markets, and the other one was the digitalization necessary for these reforms as well as the energy transition. So just a little bit of another plug that I try to for my book of 2021, which is still extremely relevant, by the way. So moving on to something, so I mentioned a couple of the key drivers for the energy transition in the Asia Pacific region, the cost consideration as well as the funding needs. Do you see any other key drivers for the energy transition in the region, Gavin?
I think the as I said, I think cost is king. That's definitely the first one, and I got thrown out of several different offices when I first started trying to sell renewable energy in the region. I think there's two other things that I would point to. So as the supply chain of the world, right, as we move from China to Southeast Asia, the need to export is critical, and you're starting to see Europe come in with CBAM, which is basically a tariff applied to countries or products that don't have a sufficient renewable energy component. And that's kind of scaring people, because if you're in Japan and you're selling cars or you're selling microchips and you want to sell them to anybody in Europe, which is a major market, or the US, you're needing to get renewable energy. There's significant supply constraints in many of those markets. So I think that next point is really important from that exporter perspective. And then I suppose another part which has been really, which we've been expecting for a long time and talking about for a long time, but has very rarely been top of mind, and that's energy security. So, if you are a power importer, like most of the region, right, you're needing to import either coal or gas or some sort of fuel in order to keep the lights on. And then you've just gone through this very painful energy spike and in many cases significantly increased the debt to equity ratio. So if you look at someone like PLN in Indonesia or EVN in Vietnam, it's been an extremely painful 5 or 6 years. And the other option, the alternative, is build a lot of solar systems or wind systems or renewable energy projects. Those are going to sit in your country. They're not controlled by somebody else, and they're just going to operate for multiple decades. And so you've significantly reduced your energy security risk and your exposure to foreign players who can then manipulate those prices against you. So I think that's become a really important factor for a lot of Asia.
The next question is, given you've been around the block, although you're a very young man, you've been around the block in Asia for what do you think what are you bullish about in terms of investment opportunities around the region? Apart from the fact that everybody needs to add gigawatts, I mean, as an investor, which markets would you be most bullish on in terms of investment opportunities, and why?
Yeah, I mean, that's kind of the exciting thing at the moment. There's a lot of different, so they move very quickly. So a market will open up and become very exciting for a few years, and then usually die down, and then another one will take over. So I think there's a lot of really interesting, broad trends that are hitting the region generally. So I think the deregulation one is the one that stands out. You've just seen Philippines, for example, reduce the foreign ownership restriction to encourage FDI. And that's very helpful in terms of allowing companies like myself to say, okay, we can put more money into this market. They've also significantly improved the regulations around developing projects. How do you get all the permits? And then how do you make sure that you can actually sell that power to different potential off-takers in the country? And so you've got 5 or 6 different ways, different groups of people, whether that's a government auction, a corporate PPA, power purchase agreement, or a local utility or whatever. You've got all these different options. So definitely, I think Philippines is famous as the market that at the moment has turned around and become very attractive after 5 years of relatively limited growth. So Philippines would be probably my top comment. That's the one I'm very focused on. I think the other one is a bit more nuanced. So if you look at Japan and Korea, those are 2 markets where the pain felt by corporates trying to get renewable energy is quite intense. And there's very limited supply, very few developers out there trying to push renewable energy into the market. And they have limited availability of land. They have complicated grid issues. You've seen Japan go from, relatively limited curtailment into very high curtailment situations. That is actually causing new investment to come in. So you're seeing a lot of data centers coming into Japan. You're seeing actually semicon guys moving in because the cost of power is in some markets cheaper. And so those 2 markets are quite interesting for me because they are at the cusp and really just starting to become independent, allow independent power producers into the market. So, and those are huge markets where you could see that the next 5, 10, 15 years is going to be a very significant growth space.
That's fantastic. Just a side question. I was not going to ask what are the biggest challenges, because if we start talking about challenges in Asia, then that's another 300 hours worth of podcast probably. But one of the things in some of the countries like the Philippines, like Indonesia, and several others in Southeast Asia, is that the approval process for a project, say you've got a very small, say 50 megawatt solar ground utility scale project, which may take you 6 months to a year to build from scratch, but it's going to take you 2, 3, 4 years to get approvals. Do you see that improving? Like, for example, I know that in the Philippines, they're very conscious of that problem, and they've adopted since 2019 this one-stop shop called EVOS, where at least you can monitor the different approvals of your project. So it's not perfect, but at least it's one step ahead, and it's also a recognition on the part of the government that long approval process is not very good to attract investments. Do you have any thoughts on that?
Yeah.
And not necessarily just the Philippines, but I know it's the same thing in many countries.
Yeah, I mean, I think you've really hit the nail on the head, right? So Philippines has really dramatically shifted their approach, and you had the Philippines Department of Energy, going around over the last 12 months, talking to different people and saying, how can we encourage you to come? What are the kind of pain points that you feel? How can we bring more energy into our country as quickly as possible, that is as clean as possible and cheap. And they are really delivering on that. You're seeing significant reductions in their cost of power. And I hope that you're seeing other countries think, oh, wait, hold on a second. They've got the first mover advantage. How do we copy them? But energy has become such a politicized topic, and it feels to me a bit like COVID and vaccines, where there's some science behind the process. There is just a cost of electricity produced by a solar system versus a coal plant versus gas, and hopefully people can focus on that and focus on, hey, it might as well have cheap and clean rather than expensive and dirty. Hopefully we can kind of align on that. But many of the countries are still super politicized. I mean, Korea is a really good example where we've been able to add quite a large number of projects, maybe sort of $300-400 million worth of projects in the last 12 months, but we're still waiting to get a grid connection. And sometimes the grid connection is there, but they won't let you connect because they're just saying, hey, you could wait till 2030. We don't care. And that the pendulum will shift back. That a new government is going to be in soon, probably very soon, given the events over the last few days. And they will switch to the other side and say, okay, now we will do renewables and let's accelerate everything and bring it in, because otherwise we're going to lose corporates to other places. So I kind of feel like it's inevitable, right? That cost is if the cost is lower for renewables, everyone's going to move in that way. That's going to drive a lot of employment and drive votes. But there's still, and this is why the work that you're doing is so fantastic, because we need to be out there explaining how these things really work. What are the real risks? And there's a lot of FUD, fear, uncertainty, and doubt that is being spread by the incumbents to try to prevent the inevitable from happening. And a lot of regulators, less so, but more the utilities, say, oh no, this is very dangerous. If we have more renewable energy, it's intermittent. How are we going to be able to control the grid? This is scary. But that's just spreading disinformation.
No, I totally agree. I mean, as we discussed a few days ago in Singapore, I was involved in this study by the United Nations Economic and Social Commission for the Asia Pacific, a study on Vietnam and Philippines and Indonesia. And I think one of the things that came up is really, number one, of course, the elephant in the room, which is there's plenty of capital available and there's plenty of projects that want the capital. So what's the problem? And then the second one is red tape, which is why I alluded to this. And then actually just 2 days ago I was in Geneva, the United Nations Environmental Program Financial Initiative kind of powwow. It's a global roundtable they do on sustainable investment. And again, this thing came up again. Red tape. How do we address it? It's easier said than done, but it is a big issue. I was going to shift gear a little bit and ask you about what are some of the most interesting trends in terms of technologies that you're seeing and the market opportunities in the region. I mean, be it hybrid system, or I don't know what you think about small nuclear reactors and things like that.
Yeah. I think that's a really interesting question. So we've got to remember that renewable energy, to a large extent, the benefits are being driven by technological innovation, right? So the 20% reduction or 15 to 20% reduction over the last 20 years in the cost of solar systems, is being driven by the same sort of technical innovation that is driving Moore's law on memory and microchip sizing. And that makes it super consistent and super convincing, right? Like the momentum is very strong. I suppose the second thing that I think about here is that the variable intermittency of renewable energy has been a topic, right? So people have said, okay, there's an issue with too much solar or too much wind coming in, and then what happens if it turns off or it's not windy or whatever? And so the other question has been around intermittency. And so for me, the battery is a key topic, and you for me, you need to look at what's really happening in the market. What are we really seeing? So, but when you go to some markets like Indonesia, where solar is less than 1% of the market, it's 1/5 or 1/6 of the size of Singapore. So if you take the total installed capacity of Singapore versus Indonesia, it's a tiny percentage. And yet there are still comments around, okay, what are we going to do with solar intermittency? Obviously, at less than 1%, it has no impact on the market, so it's completely irrelevant. But if you then compare to somewhere like South Australia, where renewable energy is now more than 70% of the market, and it's one of the biggest renewable energy markets in the world, a lot of it driven by rooftop solar, a lot of it driven by rooftop solar that was subsidized, plus some wind and some hydro, and they are seeing the problem, right? And the problem is that there is very significant variability in the spot price during the day. So as the rooftop solar systems, get going by 11 a.m. around lunchtime, there's so much rooftop solar coming into the market that it drops the spot price to zero. And then as sun sets, the solar comes off. If the wind is not blowing, you then have these massive spikes in the spot market. And the solution is batteries. And I actually we are in process of building one of the largest batteries in South Australia. And what we've seen in Australia is very rapidly that volatility moves out of the market. So as the batteries get installed, it can be just a year, like 6 months, a year. It's very, very rapid because you can develop and build these things so quickly that immediately that volatility goes out of the market and it stabilizes. So from a customer perspective, very preferable. So I think one of the biggest impacts from a technological perspective is going to be batteries continuing to drop at very rapid prices and becoming basically ubiquitous. And I imagine that in the future, all projects will have batteries associated with them. But I think we're also moving from a sort of monolithic, monopolistic industry structure where you have one utility providing all the power for a specific country to multiple different sources. So you have independent power producers. Some might be doing geothermal, some might be doing solar, some might be doing wind. But I think small modular nuclear systems are likely to be an element in the future as we develop.
And I think the key there is really that the price of batteries was, maybe 10 years ago, completely unaffordable, not even a consideration. Whereas now it's become more attractive, and looking at where it's going. Plus the fact that you're getting, newer technologies which would use less critical minerals. So there's also that trend going on. Can I pick your brain, please, Gavin, on, because we talked a lot of kind of high level from 30,000 feet about the energy transition in Asia. Could you give us, one or more kind of mini case studies of investments that you have already concluded in the public arena as examples of the trends?
Yeah. So I suppose the one of them is the battery that I was mentioning about. That's a 291 megawatt hour battery in South Australia, and it's a tolling structure for the South Australia government. And we've been able to develop and then construct that in less than 18 months. And when you think about that time frame versus The other option, which would have been a gas plant or a coal plant, which would have taken somewhere between 5 and 6 years maybe to develop, and then another 2 or 3 years to build. So very fast, and probably 1/3 or 1/4 of the cost of a fossil fuel plant. That would be one. So that's then energy in Australia, which we're in process on. In Korea, I think I mentioned, so $400 million of projects across multiple different sites, some sort of 50 megawatt sites, some more, some larger. So that's the second one. And then kind of looking back on the distributed generation side, we've been sort of building sort of 20 or 30 different sites for one customer, generating sort of $2 to $3 million of annual savings. And that I see being kind of the future. I see that continuing to grow over the long term.
Finally, Gavin, if you had a crystal ball, where do you see the region 25 years from now from an energy transition point of view, as well as the role of the private sector will have played during these 25 years? And I mean, the reason why I'm asking is because people sometimes forget that the energy, just utility business in general, the energy business is a long-term business. It's not a 1 year view or a 2 view, and we have made a lot of progress. Like Sean Kidney from the Climate Bond Initiative said at a forum this week in Geneva, we're all making progress. We still have a lot of work to do. It's not perfect, but we are really well ahead of where we were 10 years ago. So yeah, can you dust off the crystal ball and tell us about the future?
I wish my crystal ball was good enough to give you anything close to accuracy, because of course at that point I would probably be retired. But no, I love your comment. You're absolutely right. And we, it is long term. You do need to think about, life along sort of decades or 2 decades. And with that kind of view on infrastructure, it's quite easy to be more or less certain of what's going to happen. I think it's very difficult to forecast 1 or 2 years. But if I look out sort of 25 years, I think we're going to see at least 50% renewable penetration across almost every market in Asia, right? And we're coming in some markets from less than, as I said, Indonesia, very small percentage points. But so massive growth across all these markets. That's for certain. I would imagine that it will be almost impossible to install a system without a battery at that stage. Whether it's solar or wind or geothermal or whatever the system is, I think batteries will have become automatic, cheap enough to be installed without any impact. Right now, I think about selling electricity per kilowatt hour. So I'm thinking, okay, if I'm selling a solar system in Singapore, I might be selling at sort of 15 cents per kilowatt hour. If I want to add a battery that will give me 50% firm power, so that means that from 8 a.m. until 8 p.m. that I can give a guarantee of being 50% capacity of the plant, that's going to add 4 cents. So I go from 15 cents per kilowatt hour to 19 cents per kilowatt hour. That's still below most customers. Most corporate industrials are paying more than that. And that 4 cents is dropping, at 30 to 50% per year. And it dropped 50% in the last 12 months. So you can really see that that's just going to become, standard, ubiquitous. The next steps are more difficult to forecast. Like, what has happened to the commodity markets? What happened to the LNG space? Who is that being sold to? Is there one? And then what is the role of utilities, and how do they fit within this? You could see a lot of complexity on the digital side. It's very interesting to hear your book focused on digitalization, because you can see how utilities are going to need to be able to manage thousands of different generators, not 2 or 3 big coal or LNG plants. And then there'll be demand response, there'll be energy efficiency, there'll be all these different elements that are all coming into a much more rich and complicated structure, and you could see the utilities having a role to manage all of that. But overall, I think you end up with a much more stable grid because you have that diversification of generation, of demand, and of technological solutions to manage those.
Right. And yeah, I think people just keep on forgetting about the change that will occur with the mainstream utilities, and I think that's one key point. Just to supplement on that, what about the private sector? Do you see in the Asia Pacific region specifically? Because in some markets we know that private sector penetration is still relatively modest. What do you see the role of the private sector?
Yeah, I mean that's a great question, right? I think if maybe the side that is more difficult to say with much forecast though is what will have happened to our weather, what kind of climate damage will we have experienced, and what kind of backlash will we have received from consumers against companies that are perceived to have been part of the problem and not have made sufficient moves to reduce climate change. And so I think by that time you're going to have seen an RE100 community that is basically everybody, right? So everybody will be substantially closer to achieving their net zero targets. And I think it's the private sector that are really driving this change right now. And you're seeing, more and more companies right across the board, even if they're not massive energy users, making those commitments to reduce their carbon footprint. But I think that it's really the private sector that are driving this change and that are making this happen, applying pressure onto the governments. And so you're seeing this battle between the fossil fuel suppliers and the people who are profiting from that side, with the regulators in the middle being pushed much more over to the side of the corporates looking for renewable energy. So I think that it's this kind of lobbying that is going to help to bring deregulation in to break down the monopolistic barriers and then to reduce the costs and reduce the carbon of our industry.
I 300% agree, as you know. So I've taken up far too much of your time, Gavin, especially just ahead of the holiday season. It's quite a busy time for you, I understand. Do you have any kind of conclusions or quick key takeaways?
I think the key thing for me has been just that the governments are competing with each other to attract FDI, to attract renewable energy, and using that as a carrot to encourage major corporations to select their country as a base for their supply chain. And so it's very interesting to see how that dynamic has changed. Whereas before, I don't think it was so clear that each country was fighting over those companies and getting them to come. So for me, very much important to ensure that companies understand first that renewables is cheaper than the fossil fuel that they're buying, and second, that it's cleaner. And then the third thing is who are the best people to work with in order to help go through that energy transition. And you can either go to the manufacturers, whether that's REC, Schneider or whatever, or you can go to the sort of the independents who are able to use multiple different kind of technology, and you need that network of different kinds of partners and suppliers to manage this energy transition over the next couple of decades.
Fantastic. Gavin Adda, the Chief Executive Officer of Peak Energy, I am very, very grateful for your time. I really enjoyed the conversation. It was really terrific. And I wish you, your team at work, and your family a very good, happy holiday season.
Thank you so much. Really nice talking to you. Thank you, Joseph.
Thank you so much.
Thank you for listening to this episode of the Asia Climate Finance Podcast. Please be advised that this podcast is presented for educational purposes only. None of the information provided should be construed in any way as investment advice. Always consult with a licensed investment professional before making any investment decisions. Additionally, please note that the views and opinions expressed by our guests are personal and may not reflect the views and opinions of their current or previous employers.